Hi, everybody. Good afternoon. This is Dan Sheridan at Sheridan Risk Management. Uh, Glad to have you here today. And I'm going to talk about a trade that um, is good for big moves in the market. You know, when you look at the last 2 weeks in the market, it's the biggest 2 week period of candles I can remember on record seeing. Um, And obviously, the COVID correction would be one. But what that means is if you look at the last 2 weeks, these big candles in SPXs were going down. Most of these candles, if you look at them, the difference between the high and the low is near 100 points. I think the average in the candles the last 2 weeks has been in the 90s. Like, for example, if you look at Feb 21, the distance between the high and low is 106 points. If you look at Feb 25th, the distance between the high and the low would be about 84 points or something. If you look at Feb 27th, the distance between the high and the low is over 130 points. On and on and on. Even if you look at today, March 7th, relatively quiet day, you would think, up 31, the distance between the high and the low is 115, 116 points. And so, what type of trade would you be comfortable in an environment like this? Here's a trade. This would be a double butterfly. And this particular example I gave, it expires March 14th, a week from today. And the expected move between today and next Friday is about 150 points. That's like a standard deviation in the uh, SPX. So where'd you get that from? You can see here in this particular example, I'm using Schwab, alias Thinkorswim, and you can see plus or minus 150. What does that mean in English or Spanish or Swahili? It means that we've closed today in the SPX at 57.70. Okay. So it's saying one standard deviation, they expect to move 100 by next Friday. The expected move is 150 points down. That'd be 56.20. And then the upside, 59.20. So that just means there's a 68% probability and next Friday's close will be somewhere between here. So based on that, the expected move for next Friday is plus or minus 150. I basically set these directional balanced butterflies went a little under the expected move, about 130 points up or down. So I put 125 wide, call butterfly centered at 5,900, up 130 points. 130 wide, balanced butterfly centered at 5,640, down 130 points. And you can see we're currently at 57.70. And so the nice thing is this is a positive theta trade. And you're looking for, and it's relatively cheap. This particular trade is a little over $2. The call butterfly is going for around 130, 135. The put butterfly near $1. Let's call it $2.40 for the whole ball of wax. And it's a debit transaction. And you can see what we're looking for is as we get into the week, our landing for where we want the plane to land at expiration, but we can make money before it, as long as we get near it. But our landing areas for the graph would be roughly on the downside, looking at the break evens here, 56.63 and 56.16. that's where you would do the best at expiration and really hit a home run. You could see the potential profit if we land in this curve at expiration. On the upside, the landing strip is going to be 58.76 and 59.23. So interesting strategy. You can call it a spec trade. You're looking for a move, but it's positive theta. So this is a type of trade I would do in this market, and it's short Vega. So what if the volatility comes down? We're pretty high at 23. You'd be fine. So that's just an idea. I mean, there's many different double strategies. Double strategies would be, two, right? And set up for a bit of a move. You can have a double calendar, double diagonal, double long diagonal, two butterflies, double butterfly, as we said, double calendar, on and on and on. You could have so something to think about, folks. We are, if you have any other questions, you could give me an email, Dan@Sheridan Risk Management. I've been doing a show on Monday through Friday. We started it last week with Options Omega, and you can go on you can go YouTube Options Omega on Monday morning. You could check that out. And also through us, if you're interested, they have a wonderful backtesting tool, and especially if you're beginner learning, it's a great helpful tool. And we have a great discount for that tool, $300 for the whole year. And I just think it's great. You can backtest the strategy. It takes about 10, 12 seconds. So if you're interested in any of that, check us out at Sheridan Risk Management. Folks, have a great day. Thanks.